Hi, I'm Nigel Baker, and you're listening to The Future Financial Advisor. We're running this podcast to create an avenue for advisors to share their thoughts and their best interests, and really trying to attract those advisors who want to take the industry forward. What we want is great businesses who are really making a difference and really making a big impact to their clients, and we want to know how they're doing it. So in this series, we're going to be discussing the latest digital platforms, some best practices, evidence-based investing strategies. We want to give financial advisors the tools they need to help more investors improve their financial well-being. So if you're ready to take the industry forward, modernise your advisory practice and reach a new generation of investors and the new generation of advisors, then this show is for you.
So all our recordings and podcasts are general advice. All the content, all the people interviewing here, it's all their own opinions and all their own views. In no way does it constitute any personal advice or recommendations. If you need specific advice, please go and seek an advisor. Thanks very much.
Hi, Evan. How are you today?
Hey, Nige. Going really well, mate. How are you?
Yeah, great. Thanks so much for joining me on today's podcast. So the first question I've got for you, Evan, is tell me a little bit about the ETF Securities story.
Yeah, sure. So we're actually one of Australia's oldest ETF providers. So we've been around since 2003. So our founder, a gentleman called Graham Tuckwell, who you may have come across due to some of his philanthropy endeavours, mainly around the ANU. He had a background in the mining industry, and his idea back in the early 2000s was to try and get gold onto a stock exchange. So he saw that there was a fantastic market in the bullion market that was, people wanted to access it, had a lot of barriers to entry. So it was large investment size, there was storage costs, there were a whole lot of different things around precious metals that made it difficult to trade. So his idea was just how do we get that onto the stock exchange? And that got tied up with the sort of growth in ETFs that was happening around that time. So ETFs had been around since the early 1990s, but had really just been used for equities and for basic index tracking products up to that point. So he came up with the idea of the first gold ETF in the world, which listed on the ASX in 2003. That effectively became ETF Securities. So he then took that business over to Europe and built a $30 billion asset manager, mainly based out of Europe, a little bit in the US, and a business in Australia as well, which was relatively nascent. It had precious metals and a few other commodities up until 2015. And 2015, that's when I got involved, and that's when ETF Securities decided to expand its Australian operations by building an equity platform for equity ETFs and other asset classes. So we've been working on building that business for the last 7 years or so. At the moment, we've got 20 products listed on the ASX and on the CBOE exchange. We've got about $5 billion under management, just under $5 billion. And yeah, it's been quite a good growth story over the last few years. Interesting place to work, definitely an interesting industry.
Wow, great story. I didn't realise that ETF Securities came out of a gold. I didn't know the history there, and also I didn't know you'd been around for quite that long, actually, since 2003.
Yeah, we're actually the second oldest ETF provider in Australia. So I think originally there was the State Street STW ASX 200 fund, and that was pretty much it.
So there's been a lot of them. It's been a great innovation for investors and advisors in the industry to be able to use ETFs, and we still find a lot of people don't really understand what an ETF is, despite how popular they are now, which is interesting. But what are some of the key themes that you're seeing, being on your head of product at ETF Securities? So what are you seeing as some of the key themes evolving now in the industry, given you've seen this tremendous growth and product development over the last, since you started in 2015? I imagine there's been huge change.
Yeah, absolutely. I mean, so I guess ETFs, going back in the history, they started out as the sort of core index tracker type, broad-based benchmark type products, low cost, easy access. That was the sort of mantra of ETF issuers back in the day. And then along with gold and other asset classes, fixed income's a big one that's really come on leaps and bounds in the last 10, 15 years or so. Yeah, there's been a lot of transformation around that initial idea of core product holdings and low-cost funds. So now there's other asset classes. We've got obviously metals, other commodities. There's offshore, we're seeing crypto assets coming into the ETF space as well. That's something we're potentially likely to see in Australia in the coming months. But in terms of recent trends, I think the really big growth area for the last sort of 18 months to 2 years has been around thematic ETFs and the way that people are using these types of funds. So these are the funds that are really looking at some structural change in the world or a mega trend is the term that's often thrown around, and how people can use or how people can ride the growth of these sort of disruptive technologies or shifts in behavior, demographics, environmental issues, all these sort of long-term trends. So it's really been quite an interesting evolution in terms of how people are using these products. I think a lot of it came out of the rise of retail investors, and that's another big trend in the ETF market in terms of more and more retail investors getting involved. And that sort of happened around the immediate sort of post-COVID period and has carried on a fair bit. But I think also in terms of advisor usage as well, that's really something that people are looking at now in terms of not just having those standard sort of core portfolio building blocks, but looking at how they can take advantage of some of these growth opportunities that aren't necessarily one business cycle or two. It's more 10, 15, 20 plus years where you expect these types of companies to have oversized growth relative to the rest of the market.
Yeah, wow. So it's really interesting. So, you're seeing obviously people take on some of these themes, these trends that are in the market. So it really allows the end investor and the advisor to be able to really hone in on a certain area, I suppose, certain sector, and capture that efficiently, right? It's a very efficient structure as well. And there's been huge growth for that reason. It's just enabled the access to some of these markets to be a lot simpler from the old. When you and I first started out in the industry, this was almost unthinkable to be able to access all these different markets so easily. Yeah,
exactly. And I think people having access to sort of technology and tools and things as well allows these things to work a little bit better, because a lot of themes aren't drawn on traditional sort of sector and region lines. So in the past, you'd have your Aussie bucket, maybe a US bucket, or potentially just an international bucket. Now you're looking at, for example, a product that with one of our most popular products focuses on battery technology and lithium miners, that sort of thing. So you look at these products and they sector and to some extent region agnostic. So you sort of in some way you can be introducing some, I guess, not so much risks, but some exposures in your portfolio that may be a little bit unintended in terms of your overall strategic asset allocation. But I think people have the tools now to be able to look through that and see what's inside these funds, how that fits in with the rest of their portfolios. So I think that the usage of these types of products is becoming more sophisticated as well.
Yeah, really interesting. So from an ETF securities point of view, how do you build a product? Like, so for example, crypto. I just came out of a client meeting this morning, and an 80-year-old client held crypto. She bought and sold it on an exchange. So it's no longer just the millennial type of thing. It's everyone having an interest in this sort of space. So do you get demand from advisors and say, look, we'd love you to build this, or do you have a team that sort of says, hey, these are some of the themes, let's build this product and fit it? Or how does it work from a product development sort of?
Yeah, it's a bit of a two-way street really, or kind of a multifaceted beast in some ways, product development, and that's an area that I spend a lot of time on. It's partly, I guess when it comes down to it, we're all trying to design products that investors want and products that have a use in the portfolio of investors, and whether that's retail, advised, institutional, whatever. There's definitely a client focus is the first thing. Yeah, there's a combination of ideas from things that we're working on, things that we see that could be interesting, using clients as a sounding board. There's potentially reverse inquiry type things where you've got clients saying, look, it'd be really great if this product was available, and I've got clients queuing up to put their money into something like this, but it's just not there. And then the other area is obviously the offshore ETF markets are quite a lot bigger than the Aussie market, and there's a lot of different innovations and things going on there. So it's definitely keeping one eye on what's interesting and what's happening in those markets, and seeing if the types of products that will be relevant for Australian investors as well.
Yeah, wow, okay. So if advisors are out there sort of using ETFs, how do you seeing that evolve from the early days to today? Like, from your point of view, is it getting better? Is it better or worse? Like, what are some of your insights there in terms of how advisors are using ETFs?
Yeah, I think the simple answer to that is that advisors are using more and more ETFs. Not only are they using more ETFs, they're using them for a larger part of their portfolio. So I think that's the kind of the quick answer. I think I saw some stats recently that I think 60% of advisors are now using ETFs regularly, and there's probably another 15% or so that intend to do so in the next 12 months. So that's getting up to quite a large portion of the market. And I guess part of the reason for that is people listening to this podcast will be fairly well versed on the Hayne Royal Commission and FOFA and all the reforms around tied distribution and those sort of areas of financial advice. So I think the ETF industry around that time was just starting its growth trajectory. So that was really, I guess, fortunate in many ways and spurred the ETF industry on to to the sort of growth levels we've seen in the last few years. So I think it was the right product at the right time in terms of, issued by independent asset managers, not having sort of kickback type fees and these sort of arrangements that some other financial products had, particularly when you had in-house product production and advice in some of the bigger institutions. So I think in many ways it was quite fortuitous for ETFs around that time.
And is ETF retail only, or do you also have a wholesale institutional side of the business?
It's fairly well split between retail and what we call intermediary. So that's really advisor, planner, and also broker, so kind of traditional stockbroker type clients. So we've got a sales force that focuses really on those types of clients, but we do a lot of marketing through social media and direct emails and those sort of channels as well. So we're definitely, the retail segment is something that we're focusing more and more on, and that's really, as I said, sort of come up in that sort of post 2020 sort of environment. The advent of all these discount brokers and a lot more activity from trading generally.
Yeah, no, it's fantastic. It must be, it's good. I mean, the future must look very bright for a business like yours, for the whole industry, because we've seen the advisory market go from the big groups, the big banks, into lots of independent, and so they've got an open ability to recommend best interest, which is fantastic, and therefore they're using products like ETF Securities, which are much more transparent, easy to use, and better for the end client, rather than being limited on a certain number of funds that their owner told them to sell. So so it must be great. I mean, one, it's better outcome for the end investors, but for innovative businesses like yours, you're actually now getting access to the more of a market, right? Because the advisors are actually not as restrained as they used to be.
Yeah, absolutely, and we're definitely seeing that. I think in the past, people had, with active funds or with I guess unlisted funds, they were constrained by platform. There's still an element of that in terms of part of our distribution strategy is getting on as many approved product lists on various platforms as possible. So there's an element of that still, but for the most part, even if someone has a particular relationship with a platform and they can't trade a particular product, they quite often go around that and they can just self-invest via their broker. So it's pretty easy for people to access these funds, and that's definitely played into the hands of ETF issuers.
Yeah. It'd be great one day, wouldn't it, if there wasn't such a constraint on what platform the clients are on? Like, they should be able to, it should be open-ended. I mean, it's probably way off, but I don't know why it's so fixated on, you're on this platform, that platform. It's just, it doesn't help.
No, exactly. It should be sort of open slather in that regard, in terms of, just there's products there if they're suitable for that investor, and you assess that on the merits of the product, then that should be on a per client basis, I think. Yeah,
we'll put that on the to-do list. So, and you can say be as controversial as you like here, so don't worry, obviously. But in terms of, if there's one thing, you've got a pretty good insight into the industry. I mean, you're on the product side, but you've seen a lot of evolution. We've seen that happen in the advice industry. It's getting a lot better. The industry is improving a lot. I'm actually really confident that the advisors I'm talking to now are really, really passionate about helping people, rather than 10 years ago you just got caught in these conversations around product and I almost couldn't talk to a lot of financial planners because we sort of just kept ourselves in our little independent little bubble. But now it's changed a lot and it's getting better. So in terms of one thing you could change in the industry, and one thing from what you've seen and what it should look like, what would that be? Yeah, that's quite an interesting question. I had a bit of a list of things there. I was thinking about structural reforms and tax and whatever. But actually, I think the one thing that really would probably aid the industry, and it's probably something that people don't pay too much attention to, is so the secondary market in ETFs is supported by professional traders known as market makers, and that often gets overlooked a little bit. But so going back a few years, it was effectively a duopoly of two major market makers, and we saw one of those pull out a couple of years back, and they've been replaced to some extent. But I think one of the key reforms that you could look at for the industry would be to actually incentivize some of these big trading firms that are massive in terms of their market making coverage offshore to get involved in the Australian market. It's definitely starting to happen with I guess the growth in the industry and people looking at the opportunity in Australia, whereas back when we were a sort of $20-30 billion industry, it was probably not really a worthwhile endeavour for some of these types of companies. But I think getting more of these firms in is only going to benefit investors. So if you have more competition, tighter spreads in the secondary market, then people can trade these. They know they're getting the true value of the product.
and they know they're getting the best possible price. So I think that's where I'd focus in terms of what we could sort of add to improve the ETF market as it currently stands.
Yeah, well, it is something that most people a lot of people aren't even aware how that works behind the scenes. So just to put that question out there and go a bit deeper there. So the way you set the price on the asset value of the underlying securities, and then explain how that works with the market makers, how they come in and
so every day we look at what's in our fund. We get so we have a fund administrator that looks after all the valuations and the accounting of our fund. So they feed us information that we take into our systems, and we produce what's known as a portfolio constituent file. So that goes out to all the market makers every morning, and that basically tells them how to price a particular ETF, and so what's in the ETF. So they then have their own valuation models, which vary in complexity. So for an Australian stock trading during Australian hours, they'll just look at the last price. Pretty simple. If they're looking at US stocks during Australian hours when that market's closed, they'll be looking at what's happening in US futures markets. If they're looking at Europe, they'll be looking at a range of different products and things that are instruments that are available. So they'll have their own models as to what the various correlations are, and they can get quite complicated as to how they actually value these things intraday. And it's particularly challenging given our time zone, given that we're open when most of the world is closed. So there's an element of art over science in there as well for some of them. But we on products that we have where we have multiple market makers, we tend to see a fairly close consensus as to where the price should be at any particular point during the day. But it's really encouraging competition there, that you actually get a price that is fair for everyone involved.
Yeah, wow, that's fantastic. Yeah, I mean, that's a good thing, and that helps the efficiency and the pricing for the end customer, something that'd be very much well received. So Evan, it's been really, really good getting a bit of a story of your experience in the market, how ETF securities fit in, some of the themes going on, how they're being used, obviously being used more and more. So it's obviously creating some great opportunities for end investors and for your business and the whole industry as a whole. So I really appreciate your time. It's been great. Are there any other final comments you wanted to make for the audience?
Oh, look, I guess, just not so much a bit of a plug, but just really in terms of, our role as an ETF issuer, we take it quite seriously in terms of our, view of the market and in terms of educating clients. So that's a really big part of what we do is taking a product agnostic view and trying to get ETF education out there. So if anyone's listening who doesn't have, too much experience in ETFs and wants to find out more, you can either hop on our website, etfsecurities.com.au, or feel free to give us a call. We're happy to chat through. If you've got an advisor team, we're more than happy to come and present and just give you some more information on either our products or just ETFs in general.
Brilliant. Well, we'll certainly have that information there in the podcast summary as well. Please do reach out to ETF Securities. Thanks so much, Evan, for your time today. It's been really helpful and informative. I've certainly learned a few things, so I hope everyone listening has as well. But again,
fantastic. Thanks, Nigel. Good to chat.
You've been listening to The Future Financial Advisor. So if you've been enjoying the show, please make sure to share it with your network and leave a review on your favourite listening platform. Or if you've got some ideas or thoughts or would like to come on as a guest or know someone who would be a great guest, then please let me know. To learn more about Scientiam, just go to our website, scientiam.com.au, or look me up on LinkedIn. Look forward to speaking with you and see you on the next episode.